I'm James Turk. I'm a director of the Gold Money Foundation. I'm here in London at the GATA conference with Egon von Greyerz. Egon is the founder of Matterhorn Asset Management, and we had the opportunity to speak in Munich at the DEG conference a few months ago. It's great to have the opportunity to follow up. And the big news this morning is that S&P has downgraded the USA to AA+. What are your thoughts on that?
Well, you know, I'm not surprised. It should have happened a long time ago. The US, in my mind, has been bankrupt for years. You know, their debt hasn't actually, their debt has gone up since 1961, US government debt. They've had 79 increases in the debt ceiling. So, you know, they have no ability ever to repay that debt. It's just that they've had the ability to print money for a long, long time, but that is also now going to disappear because no one will buy their bonds. So this is what I've been expecting. I think this AA+ could be junk grade as far as I'm concerned because they are bankrupt. Now, interest rates are going to go up for the US, for the rest of the world, and it's going to be, we're going to have a real problem worldwide because you know the problems in the EU also. I'm sure you want to talk about that.
Yeah. If the interest rates go up, though, you know, the U.S. has 14 trillion plus of debt.
Yes.
It goes up 1%. That adds 140 billion to the deficit for each 1% increase. They can't afford higher interest rates.
No, and my view is that they will go up to the teens, at least, the interest rates. And if you then add that they're forecasting officially an increase of about 10 trillion in the next 10 years of the debt, and the politicians haven't even managed to agree to reduce that by, well, they're trying with 2 trillion, but they haven't even agreed on that. And, you know, it's scandalous, the way that they have behaved when they're rearranging the deck chairs on the Titanic when the country is sinking, and they're bickering about, you know, the million here, a billion there, a trillion there, when they actually need to reduce the debt dramatically.
Yeah.
But they will never agree, of course, and that's why the country is being taken into the abyss now.
Yeah. So, you know, even though we're headed down the road toward the edge of the cliff, and, you know, probably a lot of people in Washington see it, nobody's making the U-turn to turn the country around the right direction.
No.
And even that 2 trillion that you were talking about, that's just cutting potential future spending. It's not cutting, you know, real spending.
Yes. And the official forecast that they have of a circa 10 trillion increase in the next 10 years, that will not suffice, in my view, because you have, first of all, unemployment will go up dramatically. You have the banking problem is massive. You know, the toxic debt in the banks is going to re-emerge now. And the US will need to print unlimited amounts of money to save the banking system in their own country, and they're probably going to try to help the rest of the world also. So we are going to see now the start of what you and I always thought will happen, the hyperinflationary depression.
Yeah.
And there will just be unlimited money printing.
Yeah, so in an attempt to save the banking system, they're going to destroy the currency and therefore destroy the economy.
Yes.
The economy as well, which means the banks are going to be destroyed in the long run anyway.
They are, and the interesting thing is they will destroy their currency, but sadly, there isn't any strong currency in the world right now. I mean, you and I agree also on the fact that all currencies will decline. It's just,
all national currencies, the strong currency being gold, of course.
Exactly. That is the only real money, and that is the only measure that we should use. There's no use measuring against the euro, or, you know, is the euro going to be strong or weak, or the dollar? Doesn't matter, because they're all going to weaken against gold. Even the Swiss franc will. It's gone sideways now for a while against gold for a year, but also the Swiss franc will weaken against gold.
Well, the point I've made about the Swiss franc is, you know, one little country cannot stop this tidal wave of bad currency being created around the world.
No.
So if you have a tidal wave of hot money coming toward you, you know, even if the Swiss National Bank pursued prudent policies, it can't stop a tidal wave.
No, no.
But, you know, not to pick on the U.S., if we look at this side of the pond, I mean, there are a lot of problems here, too. We already know about, of course, Greece and Ireland. You know, Italy is on the ropes. Spain is on the ropes.
Yeah.
Somehow the U.K., which I think is probably a better position, if not worse than the U.S., has managed to avoid the limelight for the time being. But
Yes.
I mean, here in London, here in the UK, the situation is just as bad, isn't it?
Absolutely. I think is as bad, or if not worse, than the rest of Europe. It's just as you say, it's a matter of focus. You know, the US has for now a few years managed to direct the focus onto Europe and therefore avoid problems with their own debt situation. But now it's coming to the US. I've been expecting that for a long time, and it will also come to the UK. There's no question about it.
Yeah.
You take the European banking system now. I mean, a lot of their funding is short term, and they have about 5 trillion euros to refinance in the next 2 years. 5 trillion, that's about half of the GDP of the EU countries. In this market, there is no chance of refinancing that. Again, yes. It will lead to the Europe ECB printing unlimited amounts of money. They will do.
Yeah.
Whatever they say, they will do.
So, you know, right now, you know, we're in a situation where the stock markets have been hit. There's a lot of question about the security of any kind of debt paper, you know, that people are holding, particularly sovereign debt paper.
Yeah.
What about corporates? Would you recommend holding any corporate bonds or corporate paper at this time?
No, I wouldn't. I wouldn't.
Because of the currency risk.
Exactly. You have the currency risk, and of course, if you get a downturn in the economy, a lot of corporates will have problems also. Mm. No, I mean, the choices today for investors are so limited. And as we've been talking about at this conference, you know, very few people understand gold and very few people are invested. I mean, I was speaking at a family office conference in Geneva a month ago. There were about 250 family office managers there managing a lot of money. They had no clue what was happening in the world. Not a single one owned gold, and they had no intention of buying gold either. And that shows you, you know, they're still looking at the old conventional methods of investing, bonds, stocks, etc. But they don't know what's going to hit them. You know,
I actually find this quite amazing.
Yeah.
And you're being based in Switzerland. Let me ask you this question. You know, 25, 30 years ago, I could travel to Switzerland and everybody understood gold.
Yeah.
You know, when I go to Switzerland now and I talk to portfolio managers or family office managers, very, very few of them understand gold. How could that happen in Switzerland, that so few people truly understand the importance of gold in a portfolio?
Well, the Swiss banks changed from being, you know, the old conservative Swiss banks to being part of the world financial system. And they became Americanized totally, and they started taking the same risks and having the same short-term performance and the same short-term investment activity that all other banks in the world have had, because it was all about short-term performance. So they forgot about wealth preservation that Switzerland was all about, and that was left behind, and they leveraged their banking system dramatically. So it's very sad, because gold investment has always been a tradition in Switzerland. You know, the Swiss always used to buy their little frenemy every month to save, you know, X% of their wages, but that disappeared. But I'm sure it's coming back now.
Yeah. So, you know, in terms of where the Swiss banks are, basically avoid most of the Swiss banks, other than, you know, some of the traditional old line private banks, which still understand gold, and maybe some of the cantonal banks as well.
Yes, I mean, they're definitely better, but my concern is if something happens to the banking system, if something happens to the big banks, you know that the whole system is totally interconnected. You know, even if a private Swiss bank, if they receive a dollar deposit, what do they do with it? They put it in a US bank. If they have a foreign exchange transaction with a dollar counterparty, they will have a US bank or a major bank as counterparty.
Yeah.
So if we have a problem in the banking system, I think all banks will have problems. And this is why you have to have gold outside the banking system, as your as the bottom of your wealth pyramid.
And more generally speaking, this is why when you're in a financial bust, like we've been in for several years now, you want to avoid promises. You want to avoid those types of things that you're tying up wealth on the basis of someone else's promise, and own tangible assets instead. And if you want a liquid tangible asset, you know, gold and silver are, you know, obviously the among the top choices.
Absolutely, and you know, I try to instill in investors that there should be no one or as few obstacles as possible between you and your asset, i.e. your gold or your silver, your physical asset. Therefore, you should hold it so you have to take possession yourself, and it's outside the banking system.
Yeah, you're also the proprietor of SwissGold.com.
Gold Switzerland.
Gold Switzerland.com.
Yeah, Gold Switzerland.
And is that the thinking also behind that
yes,
service?
Yes, I mean, what we do is very similar to what you do, although actually our investors can they own their own bars. They have their own serial numbers, and so they can actually go and visit their gold and take it out if they want, which is also in vaults in Switzerland and in the
You can do that in gold money as well, but it has to be a London Good Delivery 400-ounce bar registered in your name at any one of the 3 vaults. Yeah.
I think that's the only way to do it. And that's the way you should own gold or silver.
Yeah, I agree. Is the Swiss name been tarnished because of some of these issues in the banking system?
Absolutely, totally. Because now, with the issues in the banking system and with the attack of the US after the UBS affair, now it is not the same. And of course, banking secrecy is now disappearing in Switzerland.
Yes.
And will totally disappear by 2014 if now the FATCA and the rules about actually they require each bank to report every American citizen.
Yeah.
And of course, every European country is also demanding from Switzerland to get information. So I think it's not gone yet, but it is going, the banking secrecy. But it's still, you know, the political stability in the country is still the same, in my view. So it's still one of the most stable and safest countries in Europe.
But with the Swiss franc so strong, it's obviously going to have a negative impact on the export industries. You know, tourism is still an important part of the Swiss economy. I mean, it's obviously going to have a negative impact. So the Swiss economy's got some difficult issues to deal with here, doesn't it?
Very difficult. But you look long term, though. If you look at, you know, I was starting my working life in Switzerland in '69, and then I came to the UK in '72. There was the pound was 10 Swiss francs to the pound. Now it's 125. It's gone from 10 to 125, and the dollar was 430 Swiss francs to $1. And now it's 76 today, I think it is, 0.76.
Yeah.
So the Swiss franc has continuously revalued against all currencies, and the country has prospered. So in spite, you know, it's a fallacy to believe that it's good to have weak currencies, because the countries with the strongest currencies, they are actually the strongest countries financially also.
Yeah.
So, but now I think, yes, this is short term, this is terrible for Switzerland. In spite of that long term, they have prospered. But short term, you know, they for the industry, for tourism, etc.
Yeah. The thing about weak currencies, that's just another, you know, like you say, you use the word fallacy, you know, of mainstream economic thinking today.
Yeah.
What you really need is a currency that has stable purchasing power, so that, you know, people can interact with a level playing field.
Yes.
And having a sound money. But, you know, you're talking about the Swiss franc strengthening against the US dollar and also the British pound. But the price of gold is going up even in terms of Swiss francs.
Yes, it does. I mean, if you take since now the last 11 years, of course, it has gone up. Again, less than all the others, but it has. But in the last year, as I said before, has been going sideways.
Sideways, yeah.
The Swiss franc, or gold against the Swiss franc. But I see it in a triangle now, and I think that will break out pretty soon. Also, that gold will start or resume its strong uptrend against the Swiss franc also.
Yeah, that's the way it looks to me. And with all of this uncertainty about sovereign debt continuing to grow, it seems inevitable that, you know, gold is going to continue its rise against all national currencies. Any remaining thoughts that you'd like to share with this is going to be viewed like your last video, you know, among thousands of people around the world. Any last thoughts you'd like to share?
Well, you know, one has to be concerned about the world. I mean, I wrote a report 2 years ago called "The Dark Years Are Here," I think it's now starting. I think it could be terrible for the world. You know, it'd be much worse than any of us can ever imagine. So, you know, for some of us who are lucky, first of all, we've got to put our financial house in order, if you haven't done it. And we know that if you take gold and silver that we're talking about, less than 1% of world financial assets is still in gold, or around 1%.
Yeah.
So that means that no one is invested. So number one, put your financial house in order, and number two, see that you and your family is safe. But of course, everybody can't do that, and socially, it'll be terrible for a lot of people.
Yeah, I think we have some tough times coming.
Yes.
Well, Egon, it's always a pleasure to speak with you. Thank you for sharing your thoughts, and maybe we can do this again in the not-too-distant future.
I hope so. It's a pleasure. Thank you very much.
Egon von Greyerz of Matterhorn Asset Management. Thank you, Egon.
Thank you. Thanks.